I might as well do that now. No reason not to. That way everybody can see it, hopefully.
Yeah. There we go.
Cool.
I got the official notice that we are now streaming live on YouTube. Look at that.
You all hear me?
Yep.
Yep.
What's up? Going?
Good to hear you. Good. Good. I was just sharing to Mike, with Mike, we're trying something new today. We're going to live stream this across our channels, see if we can hit some additional people with some great knowledge. So we are officially live streaming.
Love it. It's great.
Just so you know. I'm going to actually put it on some of our channels, see if I can figure this out. I tried to live stream something a few weeks ago and it did not work. So you know what? We're gonna try it again. Second time's a charm.
Nice.
Yeah.
How was the weekend?
It was good. It went way too quickly, but we got a great fall coming up. So it's like every weekend, there's always some time for relaxation and rejuvenation, but there's a lot of prep for the upcoming months, weeks, all that good stuff.
Like, you're gonna share your screen? Is that how it's gonna work with the
Yeah.
slide?
Yeah, it should be shared right now. So
I've never like done the Zoom like this app on my phone. So, got it though.
mobility, boss. That's the name of the game now.
Yeah. Yeah, I mean, just I haven't done the Zoom. I've done Teams and other WebEx.
Yeah.
All right, we'll get us kicked off in just a couple of seconds. Really excited to share this information with those who can join today, but really, I know this is going to be powerful information that people will start thinking about as time goes on more and more. So it'll be great to have this saved in our archive. And then of course, any updates I know you'll share with us. All right, it's 11:01. You want to kick us off, Brian?
Sure thing. All right. Thanks a lot, Tasha. My Wasserman with Kelly Insurance and Investments. And I want to thank Tasha for getting this set up today. We're here today to talk about the MarylandSaves program. We're Kelly Insurance and Investments, so we'll go through an agenda, and then I'll kick things off to Mike Kelly Jr., who's our chief officer, to go through the program and talk about, what it is and what other solutions may be out there, that sort of thing. So kicking things off, we got myself, Brian Wasserman. I'm a financial advisor with Kelly Insurance and Investments, Kelly Financial Advisors. We got Mike Kelly Jr., our COO, on the call as well. And then, so Maryland HB 1378 is the legislation. So we'll talk about that, what it is, what does it mean to you. Then we'll go through the Maryland Saves program overview, talk about some retirement plan solutions that are out there that will cover you in place of this, and then we'll go through with some closing remarks and any questions y'all may have. So who are we? We're Kelly Financial Advisors. If you don't know us, we're located in Annapolis, Maryland. We're a hybrid RIA, registered investment advisory firm. We have roughly 400 million in assets under management here locally in Annapolis, and then we have our own independent RIA with over 3 billion in assets under management, and we're fully independent shop. So we also are retirement plan specialists. We really specialize in retirement plans, whether it be 401k, 403b, simple IRA, SEP IRA, whatever it is, we do it. And then we sign on as 321 investment fiduciaries on all retirement plans. With that, I'm going to kick things off to Mike Jr. to go through the MarylandSaves program. So here we go, Mike.
Thanks, Brian. That's a good introduction. So we'll kick it off with first the Maryland HB 1378, which is actually the legislation. It was passed and signed into law actually in 2016. This is just kind of the rollout of the plan this year. It's being referred to as MarylandSaves or MarylandSaves with the $sign. Obviously, it's a lot in the news right now because, again, the program that the state of Maryland has actually launched has gone into effect. So the first thing, though, is the Maryland HB 1378. Again, it really is the Maryland Small Business Retirement Savings Program and Trust. Again, it was signed into law in 2016. And then on September 6th was the full launch of the MarylandSaves program. This program requires employers that use an automated payroll system to offer a retirement plan or sign up their employees for MarylandSaves. We'll talk a little bit more in detail of kind of what's going on and who is actually obligated to do this. Again, businesses have no payment obligations, no federal reporting requirements, and will pay nothing to MarylandSaves if they decide to go that route. The one thing I do want to stress is we are not attorneys here. We do not give legal advice. So we're just giving you what we think. This plan is changing every single day. Our lovely government likes to pass things and then hopefully get them through. And then we kind of see as it processes out. But right now, this is kind of what we're seeing and what we're advising our clients that we're working with right now. And obviously, hopefully have the ability to work with you guys down the road. So we are pretty much taking this as an or, not as an and. So any private sector, for-profit or nonprofit business operating in the state of Maryland that meets the following criteria must participate in the plan. So again, we're saying or right now. Basically, we're trying to encompass the entire net. So those that pay employees through a payroll system or service, small businesses in operation for at least 2 years, companies that do not currently offer an employer-sponsored retirement savings arrangement to employees, and businesses that have not provided a retirement savings plan in the last 2 years. So if you are any of these, right, you don't have to be all of them or anything that might, we're saying that you probably are subject to this requirement and should go into either making one of the options that kind of get you out of the qualification. So big net, really, I think if you're an employer in the state of Maryland and you've been around for at least 2 years, you're subject to this regardless of your size, and should really make sure you stay compliant. So that brings into two different things. So this is actually the MarylandSaves program. So this is the actual program that was put into place that employers have the option to opt into if they so choose. I'm not going to read through every single one of these details. We'll keep the screen up for a minute, but we'll also make sure Tasha has this PowerPoint that can go out to everybody. And we have a nice email we sent out to our client base last week that I'm happy to pass along to Tasha as well that kind of summarizes this, so you don't have to read through every slide. But basically, the state of Maryland has created a payroll deduction IRA. So there's no matching requirements for the employer. It's just simply an IRA that would be held through payroll. You have the option to do this. We use a company called Capital Group American Funds to do this for employers. The weird thing right now is that we haven't gotten much clarity on, but we're approaching this as it does not qualify, is if we had a payroll deduction IRA in a private placement for your company, it does not qualify and get you out of this requirement. So you would actually have to enroll into this plan. And we'll get into some other private ideas down the road as well. But right now, we don't believe that actually gives you a qualification to not participate in the MarylandSaves program. The weird thing is right now it's structured as Roth IRAs. You don't have the ability to do traditional IRAs, is my understanding. The issue with that is a lot of people make too much money to do Roth IRAs. So there's also, you could have more penalties and tax issues down the road. And obviously they're doing Roth IRAs because the government wants to get tax money now, right? So with a Roth IRA, you don't get a tax break, it grows tax deferred, and then everything comes out tax free. But for right now, they're running it as Roth IRAs through the state of Maryland. Again, it's changing every day, it seems like, so that might change down the road. But you will receive program documents from the program administrator, which is the state of Maryland. And then once you're enrolled in the program, you can opt out at any time. This speaks a little bit more of how it works. So you would enroll with the Maryland Saves program. You are required to automatically enroll every employee at 5%. And then that goes up 1% annually until it reaches the maximum of 10%. And then the employee does have the option to opt out of the plan within 30 days. The biggest issue with that is, you might enroll someone because it's required, but they make too much money to do a Roth IRA again. And then all of a sudden you have tax issues and you have different reporting requirements. So just make sure that if you're going to go this route, that you're having a good conversation with your employees. Look at the income phase outs, give them the warning that they should probably opt out of the plan. But as we understand it, they need to be enrolled regardless of their income, because that's the requirement of the plan. So I think that will probably change down the road. But again, right now, it's just kind of how we're seeing it rolled out. So how does this relate to employers? So you don't have to sponsor it. It's through the plan. Actually, there's nothing you have to do. It's through the state of Maryland program administrator. You basically need to provide your social security number, taxpayer ID, date of birth, address, email, anything you would do for health insurance, thing like that. And then you have to set up the payroll deductions and actually do the contributions through your payroll provider, and then review your opt-out and contribution decisions prior to each payroll submission. So employers are not permitted to make contributions to your account from their employer account, right? So this is just for the employee. There's no way to put money in for your employees through this program. It's just simply, again, an IRA, individual retirement account through payroll deductions to help facilitate it. Again, this just kind of speaks about what employers can't do, right? So you can't endorse or disparage the program. You can't exercise any control for the investments. One big issue that we also see is that only 4 investment options that are available. So that could be another issue for employers down the road, or employees. There's not a lot of options. And then again, you definitely don't want to give your employees any investment advice. That's why you bring someone like us that's licensed to give investment advice on with you. We cannot advise on the Maryland Saves program right now. I hope that will change down the road as well. I can't imagine there's going to be much help on a 1-800 number. That's probably not very staffed well since it's a brand new program. So you're kind of out on an island by yourself if you decide to go to the Maryland Saves program, but it is a way to facilitate retirement for employees, and you don't have to do any matching contributions or any, there's no cost to run the program. And then this is more information. You can go to MarylandSaves.com and MarylandSaves.net, I believe. We'll make sure that we send out those links as well. But basically, there's a $300 fee if you decide not to do it, or if you opt out of not doing anything right now. The state of California is fining their employers up to $750 per month per employee that you don't have a qualified plan in place. So I imagine that that's probably the route we're going to go, because a one-time $300 fee isn't going to really prompt many employers to do much. But that's what it looks like the penalty is right now. And we'll talk at the very end just kind of what your requirements are, and what you can look to see. And we'll answer any questions at the end, but that was just kind of the overview of the Maryland Saves program. Again, it's changing every day. We don't know exactly where it's going to go. I think it is awesome that employers are being forced to kind of help employees save for retirement. It is unfortunate that a lot of employers or employees don't have the ability or the knowledge to invest for retirement. So it is helpful in the cyber world. Obviously, 401ks are a big benefit. So I think that hopefully most of the members here are offering something, but other companies that have maybe not so much of a skilled workforce, it's nice that they're being forced to at least think about retirement, because as we know, younger employees may not see Social Security like it is today down the road. So just something to think about. So I mentioned that payroll deduction IRAs, basically the plan we just talked about on the outside of Maryland Saves, we don't believe qualify as an exemption right now, which makes zero sense to me. But that's just how it is as we're stating it right now. And all the professionals that we talk to are saying that will not qualify as an exemption. So there's three different options basically in the private practice you can do. First one's a SEP IRA. This is really any employer can do this. This is really more for the sole proprietor that is just by themselves, because the problem with this is if you decide to do a 10% or 15% or 25% as the maximum of your compensation, you have to do that for every employee. So it usually doesn't work very well because you don't want to give all of your employees this massive amount. You obviously would like to, but from a financial standpoint, it probably doesn't make the most sense. So again, no participant contributions are permitted in this plan. So it's kind of the opposite of the payroll deduction IRA. Only company contributions can go into this plan. And you just kind of make it before you file your taxes. So the maximum is the lesser of 25% of compensation or a maximum of $61,000. So again, this is going to be for that sole proprietor, maybe a husband and wife team that just wants to put some money away for retirement, doesn't have a ton of employees. Makes a lot of sense for someone like that. One step up, we go to what are called simple IRAs. They're simple, right? There's not administration costs. There's not testing. There's not all the startup costs. It's just nice and easy way to facilitate a retirement plan for your employees. Now, you do have to have less than 100 employees. So if you have more than 100 full-time employees, or I think it's 100 employees total, so part-time does count, I believe, you can't roll out a simple IRA. Participants can contribute up to $14,000 for 2022. And if you're over 50, you can put away $3,000. Basically, the employer does one of two things. They either do a dollar for dollar match of 3%. That's the maximum. So if someone's doing 10%, you cap that at 3%. If someone's doing 0, you give them nothing. Or you do a contribution of 2%, whether the employee participates or not. The maximum that can go into this plan is $28,000, basically the $14,000, and then they actually don't allow you to put more than $14,000 in a match, depending on your income. $34,000 if you're over 50. So that makes sense for some employers, especially if you're just getting started, want to provide a nice, benefit and do some kind of match for your employees. It's really simple. Again, no testing, no administration issues. You just do simply a dollar for dollar match, or you do the 2% elective. Finally, which most people kind of refer to every retirement plan, it seems like the 401k. That's just a section of the revenue, Internal Revenue Code. And we always build in a profit sharing piece on this. Any employer except government entities are able to launch a 401k plan. You can put up to $20,500 if you are under the age of 50. And then if you're over the age of 50, you're allowed to do a $6,500 catch up. Employer contributions, you don't have to do any kind of match in this plan. You're very limited. Highly compensated employees, which are basically anyone that owns 5% of the company or more, or makes over $135,000 for 2022, is severely limited to what they can put away. This is probably another conversation, but basically you can only do 2% more than the average of all the other employees. So your non-highly compensated employees. So if you're making $100,000, you might be limited to only putting away $2,000 a year, unless you do a safe harbor, which is what majority of plans do these days. Basically, that is a dollar for dollar match up to 4%, or you can do 3% to every employee, whether they participate or not. Again, that's going to probably be a more detailed discussion with us to kind of see what we're trying to accomplish, but you do have flexibility to kind of design this plan how you want. And then the maximum here is kind of back to those SEP IRA numbers where it's a 61,000 or 67,500 with the age-based catch-up or 100% of your compensation. You can't just put away more if you didn't make it, right? So that is the 401k. So basically you have three options. You can either pay the $300 penalty right now to not partake in anything. You can enroll your company into the Maryland Saves program, or you could do some kind of private 401k or simple IRA through an advisor like us. We also have the CAMI 401k program that we launched earlier this year, maybe the end of last year. Tons of options. You don't have to go into one thing. We're glad to help advise you in the best direction for you. If you have a 401k plan or a simple or a SEP, you do need to log on to the Maryland Saves or I'm not sure exactly what the website is, but you do have to log on and certify that you have a plan. or you would be fined. So make sure that you do something. You can't just sit back and hope everything's okay. You do need to go and make sure you do something, regardless. Right now, it's a weird time because it's hard to get a lot of plans set up for this year. Most plans are for 2023. So our understanding, again, this is our understanding. I'm not sure how the government's going to rule on it. If you can at least show you're in the process of starting a plan up, sometime in early 2023, you should be exempt from the penalty as well. So a lot of assumptions. We're constantly, reading the reviews that are coming out from our products that we obviously represent, and then obviously legal and ERISA attorneys that we work with are feeding us information as well. As we have more updates, we're glad to pass them along to Tasha to make sure that she gets it out to obviously the member base. But we'll take any questions. I'm sure there's probably a chat box as well. If you have anything, let us know. I don't know if Tasha, you have anything or anything we can also clarify, but thanks for your time. And we're here.
I have, I think a couple of questions. So is the website to certify that you have a qualifying plan? Is that already operational?
Yeah, I think David Reed is on the call with us as well. David is on our team. He heads up our retirement plan division. So when you work with us, obviously the advisors will interact with your employees, but David actually is kind of the intermediary, I guess is the best way to say it, between wherever the plan is and our team. So it's always has tons of knowledge. So David, do you know where they go to actually certify to make sure they have a 401k plan or simple or whatever it might be?
Yes, thanks for the question. It's very important that in order to avoid having to be swept into this, you certify that you have a qualified retirement plan. From my understanding, all employers will be receiving a communication either by email or by postal mail, which provides an access code. The website is MarylandSaves.com. Be correct. That'll tell you in the communication. And there you simply certify that you currently sponsor a qualified plan with that employer code. And that moves you right to certify my exemption there in the upper right. And you simply enter that code, scroll up.
David, your voice is a little bit muffled. Is there any way you can get your voice a little louder?
Yes. Is that better?
Yep, that's better.
Yes.
Okay. So you want to certify on this screen that you currently sponsor a plan, and of course you enter the various information and enter your business code that they've provided you. I believe it also requests your Maryland tax ID there as well, so they're able to correspond that with your business.
Great.
That's it. But it is very important to do that.
Yeah. So MarylandSaves.org, you would go there and then certify my exemption. I think the only question follow-up we've had is what's my SDAT ID? We've heard that from a few people. They put a nice little thing to search it right here. So you do need to do something or you're going to get hit with the $300 fee.
Yeah. Is there a timeline right now on when that has to be accomplished, or is that still in?
I believe it's by the end of the year, but certainly
Yeah.
Okay.
time is of the essence. As soon as you
Don't wait.
communication, do that.
Excellent. And this is the mailing that will come from Maryland Saves?
Yes.
Correct.
Okay.
Yeah. And most employers should already have this, whether it's in the form of an email, they got a letter in the mail. It was sent out on September 6th. And then the Maryland Saves program actually went live on September 15th. So it's up and running.
Understood.
Yep.
Okay. Great. And I have a slightly unrelated question to this topic, but it is the end of the year. I know most people have already evaluated all of the benefits that they'll start, or they'll continue to offer in calendar year 2023. But is there something, so do you get a lot of requests for reviews of existing plans, or how often should you, I should say, review your retirement plan? if you're
Yeah.
an employer offering that?
That's a great question. So clients of Kelly, we mandate that all of our 401k plans review their plan at least annually. Obviously, we're going to be talking if we see things going on or anything going like that, but we do want to do a full trustee level review. That's kind of what David's team heads up. So we always do it annually. And then we always pretty much benchmark and look at other providers every 3 years or so, just depending on, asset growth, stuff like that. But we're definitely meeting at least once a year with our plans. And then we do take it to market typically about once every 3 years, just to make sure fees are in line and, things change over the course. So.
Excellent.
And for any CAMI member, Tasha, we're happy to do a review of what they're doing. We won't charge that. Just we'd love to work with them, obviously. But since they're a CAMI member, and obviously we want to support you guys, we'd be glad just to give them a second opinion to make sure that is being done correctly and they're compliant. Because there's obviously a lot of laws that deal with these things as well. So we definitely, have the expertise on retirement plans.
Excellent. We really appreciate that. We were excited to launch that plan with you folks and Emeritus earlier this year.
Yeah, and I think the final thing too, just before we kind of close up is, the CAMI Emeritus plan might not be the perfect solution for you as well. CAMI's made it very clear that we aren't going to force employers to use that if it doesn't make sense for you. Yeah. So obviously, we're happy to kind of steer you in different directions based on your situation. I just want to make it clear that you don't have to go into the CAMI plan. There's tons of other options out there as well. That's the great thing about being independent is we can give you unbiased advice and make sure that it makes sense for your situation.
Excellent. Thank you for clarifying that. Thank you all. I'm very excited to share this link and thank you for this information. Make sure people get their plans certified. And if they don't, we know where to send them.
Yeah. And then here's all of our information. We're really accessible. You can schedule a meeting right through our website as well. Go on, put 30-minute introduction meeting and we get the process going from there.
Awesome. Thank you guys so much.
Thank you.
Have a wonderful day.
Thank you, everybody.